This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. The yen slumps to its lowest level against the dollar since 1990, raising the prospect of intervention. Japanese stocks rally while the rest of Asia struggles after a late sell-off on Wall Street. After the 1.5-mile-long Baltimore bridge collapses in a matter of seconds, we'll look at the impact on commerce and global trade. Plus, as South Africa gears up for election, the ruling party's chairperson tells us the ANC is campaigning to win. It's just gone 8 a.m. across the Emirates. I'm Vonnie Quinn in Dubai.
Coalition is a consequence. Okay.
Yeah.
We campaign to win the election outright.
In Dubai, it's just gone 8 a.m. Let's have a look at how markets are shaping up for the trading session. It's been 2 down days in the United States, stocks wiping out gains in the last 30 minutes of trade in the Tuesday session. But futures look to be pointed higher, so that 0.6% that's been lopped off the S&P and NASDAQ 100, well, that's the beginning of the week. We'll see how the end of the week shapes up. Don't forget the PCE data on Friday is what traders will be keeping their eyes on. The 2-year yield still at 459.30. And then the API came out and basically said stockpiles of crude are quite high. We might get some government corroboration of that later on in the Wednesday day in the United States. That has Brent and WTI trading down today. Brent about 85.50. And then, of course, Bitcoin is back above $70,000, 500 a coin, this after taking a leg lower. Let's have a quick look at this chart as well, because obviously Apple selling fewer iPhones to China had a big impact on the Apple stock yesterday. Wanted to point out that Apple and Tesla have very much diverged from the Magnificent Seven in recent months and weeks in particular. As you can see, the blue line, well, that's giving the S&P its oomph this year. The S&P is up about 9% for the year already, but that's dependent on a very tiny number of stocks, including Meta and Amazon. It's definitely not dependent anymore on Apple or on Tesla. But we want to check in on how the yen is faring and what policymakers are saying across Asia. Avril Hong is in our Singapore studio for more on Asia markets. Avril.
Yeah, Vonnie, we are on intervention watch in the Asia-Pacific as the yen earlier hit levels we haven't seen since 1990 against the greenback, 151.97. Remember, it was 151.95 in October 2022, where we last saw Japanese officials coming through with intervention. Now, against the backdrop of a cheap Japanese currency, we're seeing stocks rising. But to your question as to what we're hearing from policymakers, this is what you get when hawks turn into doves, as we get one of the more hawkish of the lot of the BOJ board members saying that financial conditions will likely remain accommodative. We're seeing real estate stocks leading the charge on the topics. Let's take a look at what we're seeing in China cross assets, as well as the renminbi might find it quite hard to resist the pressure as the Japanese currency weakens, despite what we got from the signals of the PBOC fix today. Chinese tech shares really under pressure, the likes of Alibaba really dragging the Hang Seng today after it revealed that it's going to scrap the listing of its logistics arm Cainiao. But overall, we're seeing very little risk appetite in much of the region today, Vonnie.
Avril, thank you. We'll be keeping an eye on developments. That's Avril Hong in Singapore. Meanwhile, officials in the U.S. city of Baltimore say active search and rescue operations have been suspended after Tuesday's bridge collapse, with 6 people now unaccounted for and presumed dead. The disaster happened when a cargo ship lost power and hit the Francis Scott Key Bridge. The state governor says a mayday call from the ship allowed authorities to limit vehicle traffic on the bridge. President Joe Biden spoke earlier on the bridge collapse.
I spoke with Governor Moore this morning, as well as the mayor of Baltimore, the county executive, both United States senators and the congressman. And my Secretary of Transportation is on the scene. I told them we're going to send all the federal resources they need as we respond to this emergency. And I mean all the federal resources. And we're going to rebuild that port together.
For more, Bloomberg's John Herskowitz joins us now. John, what does this mean for the global economy and for Baltimore in particular?
Well, we're going to see disruption at one of the bigger American ports. Baltimore's port was in the top 20 in the U.S., and it handled some really key things. Automobiles were a major thing, coal, steel, sugar. So the things which were going to Baltimore are going to be diverted to other ports, which could cause some backlogs. We're going to see some supply chain difficulties. So, and there'll be ports that can handle this, but they're going to be affected. And for Baltimore's port, it just looks like this is going to cause months of delay and virtually bring it to a standstill. This is something that could really hurt the city. The port has been an essential part of Baltimore's identity. There are thousands of people who work there who are going to have a difficult time because of what has happened with this bridge and the ship collision.
Yeah, absolutely. And John, what is the current state of recovery operations?
Well, as the piece noted before, the 6 people who are missing are presumed dead. These are workers on the bridge. They weren't doing anything major in terms of construction. They were filling potholes, and it gets to the identity of the city. These are the bridge runs from a place where there are factories. There is the port terminal. This is a really working class area part of the city. People who are doing repairs died in this, and it's just going to be it's going to be a really difficult thing to figure out how to fix this. You see the ship, there are containers on it. How do you get these containers off? How do you get rid of all this damage? This is a massive piece of infrastructure that is in the water. How do you take this apart? How do you get that container ship out of there and get the containers off? I don't know how they're going to do this, but it doesn't look like it's going to be quick or easy for any of it.
Such a difficult time for the city as well. John, thank you so much. That is Bloomberg's John Herskovitz. Now let's turn to the latest from the Israel-Hamas war. U.S. Defense Secretary Lloyd Austin has told his Israeli counterpart that civilian casualties in Gaza are far too high and humanitarian aid is far too low. This comes after the UN passed a resolution demanding an immediate ceasefire with an abstention from the United States. For more on this, let's bring in Bloomberg's Abir Abu Omar. Abir, what can you tell us about the latest on the conflict?
Good morning, Bonnie. So as you mentioned, the Israeli defense minister was in Washington. Now his visit was underway when other Israeli officials, including Prime Minister Netanyahu, didn't go to Washington. And that was after the UN call that you just mentioned. So, again, like you just said, the U.S. Defense Secretary Lloyd Austin told his counterpart that the casualties are too high. It was seen as sort of a blunt welcome. On the other side of the world, our side of the world, talks between Hamas and Israeli officials stalled in Qatar. Israeli Prime Minister Netanyahu was saying that Hamas's demands were too extreme. So Hamas was saying they wanted a permanent ceasefire. Israel said the only thing they could do is a 6-week ceasefire, but that they would have to go on the offense in Rafah to eliminate any remaining Hamas presence. So, talks have stalled. The welcome in the U.S. was seen as a reiteration of the U.S.'s stance in the UN meeting. So the latest we know is that the Israeli defense minister is still in Washington. CNN reported earlier that he could be meeting CIA Director Bill Burns.
And Abir, what else should we expect going forward?
I mean, Bonnie, it doesn't look like there is much of a silver lining right now. But the talks that have been hosted by Qatar are not seemingly going anywhere. We don't know if there will be another round of talks, but Israel looks like it's pretty adamant on going into Rafah, no matter what that means. It's adamant on eliminating whatever is remaining of Hamas units. And now we know that over 30,000 Palestinians have died. Over 100 hostages are still in the Gaza Strip. We don't know how many of those are still alive. So, we are looking to either another round of talks or some kind of diplomacy to see what is going to happen in the Gaza Strip.
Abir, thank you so much for joining this morning. Context there from Bloomberg's Abir Abu Omar. The chair of the ANC has told us that South Africa's ruling party needs to consolidate its support as it heads into a crucial election. In an exclusive interview, Gwede Mantashe also dismissed a new party endorsed by former President Jacob Zuma, calling it a nuisance. Yesterday saw the ANC lose a court battle to have the party removed from the ballot ahead of May's elections. My co-anchor Jennifer Zapasaja asked Mantashe about the prospect of a coalition.
In South Africa, society is not ready for coalition. They don't work in local government where they've started. Everywhere it collapsed. I'm staying in Pretoria. There's a coalition they're led by the DA for 8 years. I have no water there for 2 days now. 2 days. I don't have water. And I blame half DA because it is leading, but it shows the dysfunctionality of coalitions.
And more from that interview a little later. Still ahead, we'll take a closer look at prospects for a ceasefire in the Middle East with Ryan Boal from risk intelligence firm RAIN. That's later this hour. But up next, hear why Capital.com says the Fed's tolerance for higher inflation can support higher equity prices and also flows towards gold and Bitcoin. The market outlook next. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Vonnie Quinn in Dubai. Take a look at the yen. We are now trading at 151.69. Plenty of volatility, plenty of eyes on the movements of this currency pair right now. It's dropped to its lowest level against the dollar since 1990, and that does raise the prospect of intervention. Let's get to more analysis on this now and the broader markets with Kyle Rodda, Senior Market Analyst at Capital.com. So, Kyle, we were talking to one of our MLive strategists yesterday, Mark Cranfield, who said, look, it's going to be a very volatile week in FX. Is this just part of this volatility that we're going to see this week, or is it something just a little more nefarious?
Well, it adds an extra spice to things, I think, because certainly the volatility in this week was, sort of moving into this very, very significant PCE index release, which drops on Friday, of course, markets being a little bit thinner for the holiday then. And, obviously the big driver at the margins for FX markets, and will be going forward, is, which central bank cuts first and how deeply they eventually cut. But, I mean, clearly we're seeing a little bit of an extension on some of these, significant moves that are going on in FX markets, especially as it applies to yen depreciation. And it adds a level of uncertainty as well as basically unpredictability to the dynamic now, because, I mean, despite what perhaps the Ministry of Finances have been telling us over the last couple of days, that these moves are largely speculative in nature, really they're driven very heavily by macroeconomic fundamentals and policy fundamentals. And the Ministry of Finance today has clearly expressed its desire for a far more stable, largely lower yen, which could again add a level of unpredictability into the mix. So that US inflation data is really going to sort of guide everything ultimately. But now this adds an extra dynamic for FX traders to try and take into consideration, especially when you are looking at yen pairs, as well as obviously the Nikkei, which continues to benefit from the depreciation in the yen.
Exactly. Well, obviously it is a pretty special week and it's a holiday Friday in most markets, so it's going to be a little more volatile than usual, as you said. But what would the Ministry of Finance tolerate, and what will markets try to make happen between now and next week? Is it a possibility that markets could force an intervention?
Well, potentially. I mean, from my position, you just keep your ear very, very close to the ground, because obviously you wait for the price action, and it's normally after the fact, unless you're obviously very, very close to the situation, that you get a good sense of whether there's been any intervention or there might be some kind of looming intervention. But I mean, the problem here is that effectively, and as I said before, and despite what the Ministry of Finance has said, is that this is totally indicative of fundamentals. It probably, also reflects the fact that, the BOJ has really had its hand forced to some extent to tighten policy, because you can only imagine the kind of sell-off we would have seen in the yen had they not tightened policy last week, even though it was, perhaps up to conjecture whether they would do it or not, or whether they should have done it at all. That the problem is now, and I think ultimately, despite the fact that the Ministry of Finance is talking tough, is that because macroeconomic fundamentals and policy fundamentals are really working in the direction of a weaker yen, ultimately what they can only really do is lean against these fundamentals and lean against a depreciation in the yen, which is effectively to say to try and cause as minimal volatility in the market and as few painful adjustments to the economy as well as to financial stability as possible, and minimise that as much as possible to make sure that the costs are contained. So again, for someone like me in my position, it really is a matter of keeping your ear to the ground and being very wary of the volatility risks. But ultimately, what the name of the game here is that if those fundamentals remain in place, it is leading to a depreciating yen. For the finance ministry, it's to limit the risks, the downside risks to the economy and financial markets from this unfolding trend.
I just want to point out that a three-decade low yesterday was 151.95. We actually blew past that and we hit 151.97 a little earlier on. So we'll see if that continues. We're at 151.70 and change right now. As for the PCE data that you mentioned, what would it take to cause the Fed to backtrack on its forecasts for cuts this year from this PCE data Friday?
Yeah, I mean, this data might have somewhat of a diminished impact, at least for just this month, really on the basis of, I think, of what the Fed last week, which was their willingness to look through some of the potentially stickier elements of the data and potentially inflation running a little higher than target for a little while longer. But nevertheless, I mean, there is this real fear at the moment that not only because of the second order effects of, fairly dovish guidance last week leading to looser financial conditions and obviously potentially a lift off in inflation, there is also the possibility that, even in a slightly better case scenario, that simply we start to see policy in a position which starts to lead to a re-anchoring of inflation expectations higher. And if in this data we start to see any kind of signal that perhaps there is either re-acceleration of inflation or, like there's already been in, say, the CPI data and even to some extent the PCE index, that we're getting inflation sort of re-anchoring in the high 2s to perhaps the low 3s, that's going to really raise this concern about how the Fed would potentially respond to that. Now, the reason why markets have been so, I guess, ebullient when it comes to what the Fed has told us so far is that they're willing to, again, effectively let real rates in relative terms move a little bit lower and therefore be a little bit more accommodative for financial markets in order to hope that inflation comes down. However, to borrow some of the language from our central bank, the RBA, the narrow path for a soft landing and an inflation that returns to target has become more narrow because they have taken on this greater risk of letting inflation run above target for longer. So again, maybe this data this week won't be as impactful because of the commentary that we got from the Fed last week. But going forward, it is going to be highly, highly significant if we start to see of a re-anchoring of inflation expectations higher, a re-acceleration of inflation, and the risk the Fed may have to obviously stamp down that again a little bit harder in order to get things back under control.
All right, Kyle, we do have to leave it there, but thank you so much for your time today. That is Kyle Rodda, Senior Market Analyst at Capital.com. Plenty more is still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. BlackRock CEO Larry Fink says with people living longer lives, the average person needs to change their thinking towards saving and investing for retirement. Fink suggests looking beyond traditional stocks and bonds.
I believe there are some great areas of private markets that are going to be great investments for retirement. And I would channel that more towards infrastructure, because infrastructure has a long maturity, it has a higher coupon, but it has a lower profile of returns than what I would say other areas of the private markets. So it has a good corridor of returns, but higher probabilities of meeting those returns. And so, yes, we need to be re-looking at how we think about investing, whether that is going to be in private equity or infrastructure. I do believe, we need to be putting more long-dated assets into retirement, and so that you could meet the returns that you need to have the pool of money that you require during retirement.
Something else you mentioned was our longevity, which has increased substantially. We all benefit from that. That's a good thing. Exactly. I'm not complaining. At the same time, should we be encouraging, as you suggest in your letter, people working longer? Should we make it possible, facilitate? Should we, frankly, increase the age for Social Security?
That is not for me to make a decision, but I think we need to have a conversation. Look, you and I are the same age. Okay, we are working longer. We find purpose in what we do. The founder of Bloomberg, Mike, is still working. I believe for those who can and they find purpose in work, my gosh, work as long as you can. If you find blessings, if you find purpose in other things, do that. But I do believe we need to discuss these opportunities. I don't think the average citizen knows that, the extent of how much longer we're going to be able to live. So the beauty and the miracles of medicine has allowed us to live, 10, 15, 20 years longer than 2 generations ago. And so, but we haven't changed our system of retirement or our system of Social Security. So the most important thing we need to do, David, is have a conversation. And through that conversation, I think most people are going to elect to do things, maybe working longer, or electing to be more involved in how they put their money to work for retirement.
BlackRock CEO Larry Fink there speaking exclusively to Bloomberg TV. Let's take a look at the Middle East session yesterday and how indices fared. If you take a look there, you'll see that the DFM General Index, it was down 0.8%. Financials weak across the region, really, in yesterday's session. Commercial Bank of Dubai contributed the most to that decline. Abu Dhabi's General Index, well, it declined slightly. Aldar Properties weak there. So far, it's posted a loss of 2.7%, that index, for the year. The Tadawul down for a third session, down 0.6%. That index, though, still up 20% in the last year. Bank stocks, though, leading the declines there as well as they have been in the last couple of sessions. And then Qatar's QE index also down, and that was for a second day. Ooredoo contributing most to that decline there. This quarter, Qatar's QE down 7.4%. Do stick with us. You're watching Bloomberg Middle East and Africa. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. The yen slumps to its lowest level against the dollar since 1990, raising the prospect of intervention. Japanese stocks rally while the rest of Asia struggles after a late sell-off on Wall Street. After the 1.5-mile-long Baltimore bridge collapses in a matter of seconds, we'll look at the impact on commerce and global trade. Plus, as South Africa gears up for its election, the ruling party's chairperson tells us the ANC is campaigning to win.
And for a coalition. A coalition is a consequence. Okay.
Yeah.
We campaign to win the election outright.
It's just gone 8:30 a.m. across the Emirates. I'm Vonnie Quinn in Dubai. It looks like we're shaping up for a positive session many hours from now in the United States. We did have a down session. It just went wild in the last half hour of trading yesterday. Stocks just gave up all of their gains. The S&P 500 ended up down about 1/3%. The Nasdaq 100 the same. So that's 2 down days now for the indices. Of course, we're waiting on the PCE data Friday, really. So you do have the 2-year yield hanging out there around 459.10. And Brent crude as well at 85.51 a barrel. That is down pretty substantially. The API saying there's plenty of oil out there, and we may get government confirmation, at least out of the US, on that later on today when we get stockpile data. I do want to point out that there were a few big major moves in stock market yesterday. In the S&P, for example, we saw UPS down about 8% after it gave a forecast for sales and profit growth for the next 3 years that made investors a little skeptical. Donald Trump's company as well also added 16% in its first public day of trading, and that put his paper wealth, at least, at $7.2 billion for now. Well, I do want to point out this chart as well. It shows the disparity between Apple and Tesla and the rest of the Magnificent Seven. As you can see, Apple and Tesla wouldn't be counting on those for gains for the rest of the year, at least for the S&P 500. So far, it's up about 9%, but that's thanks to just about 60% of those gains coming from very small number of stocks, 6 stocks, including Amazon and Meta. Want to get back to the yen now, though, and how that move is reverberating across Asia. Let's check in on markets in Asia. Avril Hung is in our Singapore studio. Avril.
Yeah, Vonnie, we are on intervention watch in this part of the world as we saw those dovish comments from a BOJ hawk saying that the policy, the financial conditions will likely remain accommodative. That really sent the Japanese currency to the weakest level against the greenback since 1990. 15197 was the level. And then we saw prompt comments from the finance minister that helped to put a lid on things. But as our MLive colleagues have been pointing out, there are large options knockouts at 152 and above. If we see a breach of that barrier, we could really see that jump in dollar yen. And we are also on the lookout later this week for Tokyo CPI. So there are risks to watch on the currency space. Meantime, though, as I showed you earlier on in the program, Japanese stocks really having a good run. Those real estate counters are in the green today. Bonnie.
Avril, thank you so much. That's Avril Hung there in Singapore. Let's turn now to the latest from the Israel-Hamas war. U.S. Defense Secretary Lloyd Austin has told his Israeli counterpart that civilian casualties in Gaza are far too high and humanitarian aid is far too low. This comes after the UN passed a resolution demanding an immediate ceasefire with that abstention from the United States. Let's bring in Ryan Bowles, Senior Middle East and North Africa Analyst at RAIN. Ryan, thank you so much for joining. So many conversations happening in so many different localities. What are the most important ones? Because it feels like the headline is not changing. Israel is about to go into Rafah and Netanyahu is not interested in negotiating with Hamas right now.
Well, I would put that there are 3 conversations that we should be watching very closely right now. First are the conversations between the Americans and the Israelis. Those are coming on the backdrop of deteriorating relations between the two, and they're getting to a point where the United States might finally put down their diplomatic foot and do a hard stop to Israel's military campaign in Gaza. The second thing we should be tracking are the negotiations in Doha. Those are still happening. They don't have a whole lot of prospect of a breakthrough right now, but there's always an outside chance of a ceasefire or a deal coming from that. And finally, we should be looking for what's going on between Iran, Hamas, and Palestinian Islamic Jihad, where their leadership is currently in Tehran trying to coordinate their potential next steps as this is moving into a new, more sustained, extended violent campaign.
You say the U.S. could put a hard stop to this. How on earth could it do that, Ryan?
Well, the United States has enormous diplomatic and political leverage over Israel, not to say, of course, that most of Israel's military support and arms industry relies completely on the United States. Now, the U.S. is nowhere near that point where it would cut off arms to Israel, but it can certainly, and it already has through its abstention at the UN, shown to Israel that without U.S. support, Israel is diplomatically isolated from virtually the entire international community, which really right now wants to see an improvement in humanitarian conditions in the Gaza Strip, even if that means giving Hamas some military breathing space. In addition to that, the Netanyahu government is extraordinarily weak right now. It is getting weaker by the day, and the United States can put its fingers on the scales of electoral politics within Israel itself to potentially accelerate the path to new elections.
What would give Netanyahu political cover to not go into Rafah or to put it off for so long that maybe something else happens in the meantime?
Well, the reality is that Netanyahu has a political incentive to draw out the Rafah campaign. As soon as the Rafah campaign is completed, the major combat operations, at least the political phase of that, will come to an end. And the wartime unity government that he needs to stay in power, or provide him a buffer space to stay in power, will more or less dissolve right after that. So he has an incentive to drag it out for as long as he can, so long as his political support within Israel itself allows him to. So we've got that angle there, but there's also the angle that eventually that domestic support could collapse within Israel or start to collapse, and that would incentivize Netanyahu to try to wrap those operations up, and he may choose to still carry out a mass military assault to do so.
You say that Palestinian Islamic Jihad leadership is in Iran right now. What more do we know about what's happening there?
It's very hard to say. We don't believe that Iran is pulling the strings, so to speak, or directing Palestinian Islamic Jihad or Hamas, but certainly this coordination involves what Iran would be willing to tolerate in terms of how much longer the conflict could last. It could give them some insight into what Hezbollah's next moves might be. It could also give them some insight into what Iran's plans for Hamas might be in the longer run, because Hamas, once they're deprived of their geography in the Gaza Strip, they could end up being more dependent on Iran, particularly as they reconstitute in places like Lebanon and Syria, which are firmly under Iranian influence.
Do you see Hamas reconstituting as an entity with that name?
I think that they will be an umbrella organization that will survive as Hamas in the long run. But without the core geography of the Gaza Strip, over time, it's very likely that internal factions within Hamas will pull it in different directions. It may not fracture to the extent that we have seen with ISIS or Al-Qaeda, which have become regionalized franchises. But without Gaza to provide that kind of geographic anchor, it seems more and more likely that Hamas will be pulled into different franchises or umbrella groups under the influence of whatever geography that they happen to be in.
And then, Ryan, the negotiations that are ongoing in Doha, is it possible that you'll see a breakthrough in those negotiations, even if there's a complete stalemate or even a backtracking in other parts of, the military decision-making?
There is still a possibility of that kind of diplomatic breakthrough. And for the Israelis, the dream scenario would be to see Hamas agree to withdraw from the Gaza Strip and release the hostages. The issue with that is that Hamas right now has a political incentive to try to drive a wedge between Israel and particularly its American allies by extending the misery within the Gaza Strip. And that means not cutting a deal at the moment. But as Israel carries out some of these shaping operations in Rafah, where they're assassinating top leaders of Hamas, and they're carrying out these limited raids, Hamas's leadership may get to a point where they say they will have to come to some sort of deal, some sort of accommodation that could finally bring about a ceasefire.
What are people in Israel saying about the hostages right now?
Well, it's very divided still, but I think increasingly the public sentiment is that Israel needs to do more to secure those hostages rather than what we would have seen in the earlier phases of the war, where there was something of a split public opinion in which the hostages' lives always mattered and were always important, but the military campaign took precedence over that. I think at this point, most Israelis want to see those hostages released and returned home, even if that might mean giving a temporary pause to Hamas, and even if that might mean that Israel is unable to complete its military objectives of dismantling Hamas in the near term.
Ryan, thank you so much for the context. We much appreciate your time. That is Ryan Boal, Senior Middle East and North Africa Analyst at RAIN. Coming up, as South Africa gears up for elections in May, the ruling party's chairperson tells us the ANC is campaigning to win. More from that exclusive conversation next. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. The Central Bank of Nigeria has raised interest rates for the second time in a matter of weeks. The bank is stepping up its battle to curb inflation and sustain a recovery in the nation's battered currency. For more on this, we're joined by Bloomberg's Ondiro Oganga. Ondiro, 2 hikes in a span of weeks now. Is the central bank optimistic that inflation will actually begin easing?
We all wish central banks are optimistic, but the Central Bank of Nigeria is being realistic here. They say that from monitoring global conditions, they think that interest rates in far developed countries are likely to remain tight and high before they begin going down. And so global monetary conditions are also likely to remain tight in 2024. If they also look at Nigeria, the central bank governor was saying inflation is on a rise. Currently, they hit a high of 31.7%, up from 29.1%. Food inflation is also on the rise, 37%, up from 35%. And the same issues are what are driving inflation, one of them being high cost of transport, high cost of energy. They're also talking about insecurity in food-producing regions, but most importantly, a weak Naira. And the Naira has had a really tumultuous time since President Bola Ahmed Tinubu came into power. And though the reforms they introduced are helping the Naira and making it gain, it's still below the levels it was 12 months ago. So Africa Capital Economics say that we're likely to see 2 more hikes of 100 basis points in May and in July before they close the tightening cycle.
Wow. And then South Africa, Ondiro. Why is South Africa expected to hold, despite expectations of a decline in inflation in the next 2 years?
The central bank has also made it very clear that their goal is to anchor inflation within their target range of about 4.5%. And Governor Lesetja Hanyago has been very clear that until inflation is on a downward trajectory towards this midpoint, they will not loosen monetary policy. They will remain tight. Now, according to the Economic Bureau of Research, inflation is expected to decline in 2025 rather by 5.3% and 5.2% in 2026. But then this is not enough for the central bank to begin that loosening cycle.
All right, Ondiro, thank you. On Central Bank Watch for us today, that's Bloomberg's Ondiro Oganga in Johannesburg. And sticking with South Africa, the ruling party needs to consolidate its support as it heads into a crucial election in May. That's according to the ANC chairperson, who discussed the main issues facing voters. He spoke with my co-anchor, Jennifer Zapazaja.
The number one issue that you're hearing complaints from voters?
There are quite a number of things that...
What would you say is the number one complaint that you're hearing?
Energy is one of them. Energy. Unemployment is one of them.
Okay.
For example...
Unemployment is north of 30%.
It's very important.
Yeah. So, and again, I'm just curious what the ANC's defense is of people who are saying it has been years... and this is the state of the economy.
No,
why would we re-vote
We're not defensive. But we explain to people that, you see, if you say there is an army of unemployed graduates, you are starting at the wrong point. The first starting point is that the ANC has opened up education facilities to everybody. A white university that used to only accept white students, vets, UJ, Pretoria, UCT. All of a sudden, there's a majority of students who are black and who are actually generating a big number of young graduates. And to me, once you flood society with educated young people, the structure of that society has changed even before you do anything. And the majority of people with those degrees do get jobs. There are few who do not. And what we should be focusing on is what is called career guidance, so that people must not focus on administration and social sciences when the demand is on hard technologies. We are aware of that. Yes.
If the ANC were to be voted in again as the majority, are there changes, though, to the current policies that the party is considering?
The policies are correct.
Will there be continuity, or do you plan to make changes based on where?
There will be continuity. There will be adjustments with their need.
Where? Can you tell us where?
No rush. Relax. No rush. Let's give you an example. I talked to you about career guidance. That if you go to rural provinces, many of them will go and study public administration, municipal management, human resources, all social sciences. We have a responsibility to set up structures to give them career guidance that, listen, today you can do a quantity survey. It has more opportunities. You develop it into property management and development. You get opportunities. You even work for yourself in that space. Or you can do agricultural sciences or agricultural economics and all those things. You can produce for yourself in those issues. Once people begin to catch that up, you will see the change in the behavior of society. And that's what the ANC will do.
And that is the ANC chairperson speaking to my co-anchor, Jennifer Zapazaja, who joins at the top of the hour. Well, as many countries across Africa hold elections this year, our next episode of Bloomberg Africa Amplified will take an in-depth look at Senegal's new leadership. Don't miss that. That comes Friday, April 5th at 8:30 a.m. Dubai time. Plenty more still ahead. This is Bloomberg Middle East and Africa.
I don't see China as a threat, and I advise everyone to not see China as a threat, and I certainly say to everyone in China, don't ever be a threat.
In the last number of years, we have brought our medicines to China to help patients. But in the last 4 or 5 years, innovation has boomed in China, and it has given many opportunities for us, but also other global pharma companies to partner with Chinese biotech companies.
Some of our guests at the Boao Forum now underway in China. It's billed as the Asian version of the WF in Davos. And today's hot topics include AI, geopolitics and financial cooperation. Our chief North Asia correspondent, Stephen Engel, is covering the forum for us. So we've had 2 days of discussions and panels and meetings and so on. Stephen, also addresses from, Communist Party leadership and so on. What came out of day 2? What were the takeaways for you?
Well, obviously, China is in a charm offensive right now, and they want to get back commercial ties with the United States, Australia for sure, and others at a time of, some would say, a bifurcation of global trade and geopolitical tensions. And, of course, China's coming out of 3 years of COVID-0 and then a very rough economy right now. This is the first time after 17 consecutive years of covering the Boao Forum, I did not come back for 5 years. So this is kind of a reacquaintance as well. And that's what's happening here in the hallways of the Boao Forum. Business leaders from around the world meeting with their Chinese counterparts, state-owned enterprises, and the private sector, as well as some government officials, to kind of get a pulse check on what the investment environment is right now. Keep in mind, foreign direct investment into China in 2023 fell down to the lowest gain since 1993. There's hesitation. They want policy clarity, and that's something we haven't necessarily gotten. So that's what the big takeaway is here. You just heard from Andrew Forrest. You heard from Pascal Sorio. Essentially, they're back here trying to get a sense of the welcomeness to China. And both of them are quite bulls on the long-term prospects, despite the economic pain that's going on right now.
And, of course, many executives trying to take the opportunity to have meetings with, policymakers and so on while they're there. But we're also hearing that there might be potential meetings between President Xi and some U.S. businessmen. What do we know about that?
Yes. Well, that has happened just within the last hour or so from state media. Xi Jinping back in Beijing, where they wrapped up, of course, the China Development Forum, which is a high-powered, very private event with global business leaders and senior Chinese government officials at the Diaoyutai State Guest House in Beijing. And we had a number of senior U.S. business leaders like Tim Cook, also FedEx head, Pfizer's Albert Bourla, many others were there at the CDF. And then they got note that perhaps today there would be a chance for these senior U.S. business leaders to meet with a senior Chinese government officials. We all knew who that was going to be, and it turns out it was Xi Jinping. There was a meeting this morning or around late morning. We don't have the details, but obviously the charm offensive, if you want to call it that again, was on display. Xi Jinping would like to see commercial ties prosper again, despite the fact that there's going to be consistent geopolitical issues, especially between China and the United States. We don't have a confirmation of the U.S. executives who actually attended that meeting, but I can guarantee you any of those U.S. officials who stayed after by a day or two and it didn't come down to Boao were there waiting to meet with Xi Jinping.
And it's quite incredible because at the same time we have all sorts of other actions on the part of the US against China and vice versa, right, Stephen? So many things can be true at once. But what will President Xi have learned from the business executives and vice versa that can be useful in the future, perhaps, in terms of making the relationship friendlier?
Well, I think the number one concern, obviously, from American business perspectives, and I heard this from the U.S. ambassador to China, Nicholas Burns, a couple of weeks ago when I interviewed him in Beijing. They're concerned by the policy transparency. There hasn't been a lot. They want to see if there's going to be some policy action fiscally, monetarily, to back up an economy that is struggling at a time with extreme stress in the property sector. Consumers are also not spending. We had those numbers. While Tim Cook was in China, essentially Apple's iPhone sales here in China fell 33%. That was after an already dismal 25% drop in January. So the consumer doesn't have the confidence. The corporate sector does not necessarily have the confidence. So they want clarity on that. They also want clarity on the expansion of the anti-espionage law that has come into place, and data security, and the raids that were conducted against U.S. consultancies like Bain & Company, Minsk, and others, and the arrest, according to the U.S. ambassador, of U.S. business leaders here, and the opacity of those kind of laws as well as the policy going forward. So there's a lot of clarity both sides want to have.
Stephen, thank you so much. Wonderful context there from Bloomberg's Stephen Engel at the Boao Forum in China. Well, let's take a look at markets right now, particularly the yen, which, as we know, has been weakening. The BOJ governor saying that the BOJ expects financial conditions to stay easy. This is Bloomberg.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. The yen slumps to its lowest level against the dollar since 1990, raising the prospect of intervention. Japanese stocks, though, rally while the rest of Asia struggles after a late sell-off on Wall Street.
After the 1.5-mile-long Baltimore Bridge collapses in a matter of seconds, we'll look at the impact on commerce and global trade.
Plus, as South Africa gears up for its election, the ruling party's chairperson tells us the ANC is campaigning to win.
We don't plan for a coalition. A coalition is a consequence. Okay?
Yeah.
We campaign to win the election outright.
More on that later this hour, but right now it is just past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zabasadja.
And I'm Bonnie Quinn in Dubai. And Jen, it looks like we might be headed for a positive open, at least in the United States session later on today. This after 2 down days. We had the S&P 500 down about 1/3%, as well as the Nasdaq 100 down about 1/3% in the Tuesday session. And this really just in the last half hour of trading. So it was a big drop in the last half hour. Plenty of stocks, though, were on the decline before that, including UPS, which gave a 3-year growth in sales forecast, which was maybe too good because it had market participants skeptical, and they sent that stock lower. Another stock that we were watching in yesterday's trade, beyond Reddit, which also had a great day, was the Donald Trump SPAC merger, which went public. It went public and then it rose another 16%, and that put Donald Trump's wealth, at least on paper, at $7.2 billion for the moment. In other asset classes, we're seeing the 2-year yield stay around 4.59% before the PCE data Friday, and a little weight to crude oil, both Brent and WTI today, as it looks like stockpiles are pretty hefty. Quick look at this chart. We're looking at Tesla and Apple just absolutely diverging from the rest of the Magnificent Seven. And if the S&P wants to hold on to its gain so far this year of 9%, it's going to be dependent on those stocks that have caused about 60% of that gain. And that's just a few stocks like Amazon and Meta, Jen.
Yeah, that's right, Vonnie. Look, you mentioned that we're seeing futures right now, at least U.S. futures, pointing slightly higher today. But that is coming after we saw Tuesday the S&P actually ending down. But if we take a look at developing nation stocks, they actually rose on Tuesday. They're marginally down right now. But this chart is really interesting, especially as we approach the end of the quarter. We've seen developed market stocks continue their run higher. Of course, a lot of that is driven by that AI enthusiasm, as you mentioned. That, though, is not not trickling to other EM markets. Right now, we see the MSCI EM index up just over 1% in the past 3 months. And the basket really is diverging from what we're seeing with DMs, contending with U.S. election risks, a higher for longer narrative from the Fed, and a very nascent rally in Chinese equities, which we've seen. It still sees Chinese stocks lower at the end of this year. What we're hearing from Barclays analysts as well, they're weighing in and saying that a shallower U.S. easing cycle will inevitably continue to weigh on EM assets in the long run. So that's just a look as we head to the end of the quarter. Let's, though, turn to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen, we're looking at the yen today after it hit 151.97 against the greenback, something we haven't seen since 1990, surpassing 151.95. In October 22, that was when Japanese officials came in with intervention. Now, the weakness today triggered by BOJ hawks sounding dovish, saying that financial conditions will likely remain accommodative. The finance minister coming through, keeping a lid on things with his comments. But don't forget, we also have a large number of options. And that could actually, if we see a breach before the 152 level, we could see dollar yen start jumping. We also have Tokyo CPI to get through later in the week. Let's flip the board and take a look at what we're seeing in the stocks, because Japanese equities, they're really running higher today. It's not just because of the cheap yen, also a month-end thing as retail investors swoop in, as is the last trading day before we see many companies going ex-dividend. The Chinese tech names, those are the ones that are lagging today after Alibaba says it's scrapping its listing of a logistics arm. And that's what we're seeing in the Asia Pacific today, guys.
And we are going to continue to keep an eye on those moves. Avril, thank you. Avril Hong there in Singapore. Officials in the U.S. city of Baltimore say active search and rescue operations have now been suspended. This after Tuesday's bridge collapse, with 6 people unaccounted for, now presumed dead. The disaster happened when a cargo ship lost power and rammed the Francis Scott Key Bridge. The state governor says a mayday call from the ship allowed authorities to limit vehicle traffic on the bridge. For more, Bloomberg's Derek Wallbank joins us now. So, Derek, a very sad day for Baltimore and for those who lost their lives, clearly. What else does it mean in terms of rerouting trade and shipping and containers to other ports?
Well, yes, exactly, Vonnie. I think that it's going to have a substantial and lasting effect on trade, particularly trade with the east coast of the United States. You know, the port of Baltimore is ballpark about 3% of cargoes on the Atlantic and Gulf parts of the United States. However, it is quite concentrated for a couple of things. Automotive is one of those. Farm equipment is one of those. Some exports, including coal, would be one of those. It's also a cruise port there, serviced by Royal Caribbean and Carnival. So this will be, as well as I think Domino Sugar has a facility there. So as I say, there's a wide-ranging set of impacts here. Additionally, in terms of transportation, the key bridge is the southern side of the Baltimore Beltway. 2 of the main highways running through Baltimore go through tunnels where you can't really put hazardous materials on trucks of certain kinds. And so to transport those around the city of Baltimore adds maybe 45 minutes to those journeys. You are talking about significant delays and snags and snarls as it comes to shipping, with all of the associated costs and delays that may come on that. The timeline for this, Vonnie, I mean, you're talking about weeks to when the debris is cleared. You're talking, it's hard to say, but maybe a month or so, could be more. Until the port is open. I think it's too early to call it exactly at this point, but you're talking about sizable delays, and then until the bridge is actually reconstructed and all of that logjam clears, I mean, at that point you could be talking even years.
Derek, in terms of what happens next, we heard President Biden talking about how he believes the federal government should be paying for any liabilities. But what do you know about sort of what is the next step here in repairing this?
Well, Jennifer, I think it's a really great question, because there is some precedent to suggest that you could do an emergency supplemental funding bill to specifically try and direct funds to this. Certainly, there are some funds in the transportation measure that went through earlier under the Biden administration that are available to the state of Maryland to begin the process here. It's not going to be possible for a variety of legal reasons for the full cost of this whole operation to be recovered from the ship owners or anybody else. So it's going to probably have to be taxpayer dollars that are going to have to come into this. Now, I would observe that passing anything to do with government funding in the United States seems to be quite difficult at the moment. House Republicans have a very bare majority in the House and have looked to cut spending overall, which is to say that there hasn't been the sort of bipartisan group of alignment to try and spend a bunch of money. So the money for this may have to come from other places. That's a battle that we'll have to sort of see how that goes. What I would say is that a good place to look for money of this, if Congress were looking for an option, is that toward the end of the fiscal year, and we're talking about September, if they didn't do an emergency supplemental, you do have to pass new funding bills anyway to keep the government open at the end of September. Nobody likes a shutdown before an election, so maybe that's an opportunity where you could get something riding along. I would also note that Congress also loves bundling things together, so there's a possibility you may see people try and unstick Ukraine aid and put this alongside or any other number of creative solutions to try and get some money unlocked, because this is going to be a very expensive rebuilding effort.
And it is going to have to happen quickly. Bloomberg's Derek Wallbank, thank you so much. Much appreciated. Let's turn now to the latest from the Israel-Hamas war. U.S. Defense Secretary Lloyd Austin has told his Israeli counterpart that civilian casualties in Gaza are far too high and humanitarian aid is far too low. This comes after the UN passed a resolution demanding an immediate ceasefire, with that abstention from the United States. For more, let's bring in Paul Wallace, our Middle East economy and government team leader. Paul, thanks so much for joining. How quickly are these relations deteriorating? It seems like, there's more from Netanyahu now saying, look, we're not doing anything that you say.
Yeah, I think it is clear that in the last 2 weeks, even in the last few days, there's been very significant deterioration in U.S.-Israeli relations, and including between Joe Biden himself and Benjamin Netanyahu. What the divide is down to, I think, is probably first and foremost Israel's insistence that it needs to attack the southern Gazan city of Rafah. From Israel's point of view, there is no if or buts about this. They have to attack the city. They say there are roughly 8,000 Hamas fighters there, that it's the last bastion of the Iran-backed group, and that until those battalions that are there are destroyed, the war cannot be over. The U.S. hasn't officially said it will not back an offensive on Gaza under any circumstances, but I think it's very, very clear that it doesn't want that to happen, and that's the stance of pretty much the rest of the world too. They do not want Israel to send forces into the city, which has more than 1 million civilians. Most of those were moved into the city or were effectively told by Israel to go into the city as Israel concentrated on the north of the Gaza Strip at the beginning of the war. It's a huge point of contention between Israel and the U.S., and as you said, Israel does not seem like it's going to budge in any way on that.
Paul, where is the U.S. at in trying to get Israel to call off that planned offensive? Because we've been hearing about this, as you mentioned, for quite a while now.
Well, I think we had as far as the U.S. is concerned, it had a bit of a setback this week after the UN vote on Monday. That vote delinked or didn't specifically say that the ceasefire could only happen if the hostages held by Hamas in Gaza were released. Israel didn't. For that reason, Israel expected the U.S. to exercise its veto. It didn't. It merely abstained, while the other 14 Security Council members voted for the resolution. And because of that, Netanyahu cancelled a trip that an Israeli delegation was meant to make to Washington this year. It was going to be led by the National Security Advisor and one of Netanyahu's closest allies called Ron Dermer, who Bloomberg spoke to yesterday. Now, Israel says it's willing to listen to whatever ideas the U.S. has, whatever alternatives the U.S. is proposing to an offensive on Rafah. But so far, the U.S. hasn't spelled those out, at least not publicly. Dermer said yesterday that Israel just doesn't believe there's any alternative. It will listen to the U.S., but it doesn't think they're going to be able to come up with any solution.
All right. Paul Wallace there, our Middle East economy and government team leader. Paul, always great to get your insight. Thanks so much for joining us, as always. Let's turn now to the African region. The chair of the ANC has told us that South Africa's ruling party needs to consolidate its support as it heads into a crucial election. In an exclusive interview, Gwede Mantashe also dismissed a new party endorsed by former President Jacob Zuma, calling it a, quote, nuisance. Yesterday saw the ANC lose a court battle to have the party removed from the ballot ahead of May's elections. I asked Mantashe about the prospect of a coalition. Take a listen.
In South Africa, society is not ready for coalition. They don't work in local government where they've started. Everywhere it collapsed. I'm staying in Pretoria. There's a coalition there led by the DA for 8 years. I have no water there for 2 days now. 2 days. I don't have water. And I blame half DA because it is leading, but it shows the dysfunctionality of coalitions.
And we'll have more from that interview later in the hour. Also, the South African Reserve Bank is expected to keep its rates on hold when it meets today. We have a preview of that also later in the hour. Stick with us. This is Bloomberg.
Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. The yen has been slumping. It's at its lowest level now against the dollar since 1990, raising the prospect of intervention. Joining us is Mavish Ayub, Senior Investment Strategist at State Street Global Advisors. So it's one of those things where, you wait and wait and wait. It takes a long time, but then happens overnight. We literally went through the 1990 low today. Does it continue, Mavish?
Yes, I think, interestingly, despite the decisions taken by the Bank of Japan recently, which I don't think were as much of a surprise to the market, the currencies are very much driven by the interest rate differential. So even though they have raised rates a bit, the differential is still very much in favour of the dollar. And so you've seen the dollar-yen sort of resume its uptrend. And, it's been trying to break through these levels for some time, and now it eventually has.
Mavish, what does that mean then for Japanese equities? Because we are seeing Japanese equities really lead Asian equities more broadly right now, but does it sustain?
Yeah, actually, we've been starting to see some good fundamentals come through for Japanese equities, particularly on the sentiment side. And I think now that they have the policy boost, and I think the policy was much more supportive for equities than it was essentially for the currency. And hence, we're seeing that resumption of sort of equity performance in Japan.
What is State Street doing then in terms of what the markets are showing us? So on the one hand, you have U.S. equities that just can't stop going up. Same with Japan, and then other markets where we're really stuck. Does State Street see that continuing?
Yeah, so, what we do is we have a tactical asset allocation process, which is something we review on a monthly basis. And what we've seen in the last 6 months is a very consistent overweight to equity, and it has been concentrated in US equities. We started off, about 10 months ago, actually overweight to European equities, but we did not see earnings growth follow through as much, and so rotated back into US. So, yes, it is a very consensus trade, and everyone is very concerned about the narrowness of the market, but ultimately we do see it supported by sentiment, macro, and ultimately earnings. So we do expect to continue to see that outperformance of US equities.
But does it run out, Mavish? I mean, a lot of the question has been, have equities gone too far too fast? Does it start to run out? Are you of that mindset?
Yeah, you raise a very interesting point. So, we look at both sentiment and fundamentals, and our sentiment indicator has very recently gone into euphoria. So it, indicates very, very low levels of implied volatility across regional equity markets and currency pairs. So we are definitely a little bit more cautious, but I think as long as earnings continue, we should continue in the medium term to see that outperformance. But yes, absolutely, there's a lot of concerns about equity markets in general being quite toppish. So the key thing is to really construct the portfolio with adequate diversification, whether that's in the equity department itself or more broadly across asset classes.
Well, that's just it, Mevish, because how do you do that now? Where do you go? Do you turn to a different kind of asset class? Commodities are a little volatile these days. FX the same. Do you look at bonds?
Yeah, no. It's I think for diversification, I actually think the equity market is very interesting. So not just having all of your eggs in one basket, like sort of a growth strategy, but really diversifying across value and even potentially thinking about sort of stock selectors to add that additional source of unique alpha into your portfolio. But having a balanced portfolio, so even though fixed income hasn't performed as well as we'd expect, still having that component in there, looking at a typical 60-40 portfolio still will give you good risk-adjusted returns over the longer term. If you can then think about having a tactical overlay, which allows you to shift away from your strategic assets on a temporary basis, that will be another unique source of alpha. So it is difficult, but those unique sources of alpha do exist. And if I was to summarize, it would be in stock selection, it would be in tactical asset allocation, and thinking more about having a higher percentage of alternatives in your portfolio.
Mevish, we've talked about DM, developed markets. You mentioned U.S. equities and European equities. When we talk about EMs, is there an opportunity here as well? Because we were talking at the top of the show about, although EMs have not experienced the euphoria that we've seen in developed markets, they are still up somewhat.
No, you're absolutely right. And I think the sentiment we are starting to see turn in emerging markets. I think the relative attractiveness of emerging markets versus developed is still not that great, but we have very recently gone slightly overweight in emerging markets, and we were underweight and then neutral over the last 6 months. So there has been a bit of a shift, and it has been driven by sentiment and macro and the valuation factor. And emerging markets is essentially very much dominated by China, so that is essentially a view on potentially Chinese equities bottoming out at this level.
We have to leave it there. Mevish Ayub, Senior Investment Strategist at State Street Global Advisors. Mevish, thanks so much for joining us there in studio in Dubai. All right, stick with us. There's plenty more still ahead. This is Bloomberg.
Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Let's take a look at commodities. For some, it hasn't been a great day. I'm talking about iron and copper, for example. Iron ore extending its biggest daily loss in about 2 weeks. That market pressured by signs of weak steel demand in China, of course, where prices have slumped to the lowest in 7 months. As you can see there, futures are below $103 a ton. And then, of course, Dr. Copper, well, it's not having a great day either. Also on the decline by about 0.5% per metric ton. Continues to be on the decline. And we had the Chinese Premier, Li Qiang, downplaying concerns about challenges facing China's economy. But it does seem, Jen, like China is really, in dire straits and needs the authorities to step up measures to support expansion.
Yeah, and we'll wait to see how that has an impact on markets. Vonnie, look, we're also paying attention to what oil is doing right now. Brent crude down almost 0.9% there. We're seeing that modest decline right there. But really what we've seen over the past quarter, we've seen oil break through the tight, narrow range that it's been trading over the past few months right now at 85.47 there. So we'll have to see what the impact of geopolitical tensions, also OPEC plus cuts has on oil. Also, we're paying attention to gold right now, still holding at that 2,177 mark right there, marginally down, but still investor focus is shifting to that PCE data later this week, and we'll have to see whether or not that has an impact on gold. Bonnie?
Absolutely, and you mentioned cocoa. It's above $10,000 and continues to rise. In fact, Hershey got hit with a downgrade because of those cocoa prices touching a record. Hershey, of course, as you know, Jen, the famous chocolate maker. I'm sure there's a couple of Hershey's treats that we wouldn't say no to every now and then, but they are getting more expensive.
They are getting more expensive, Bonnie. We're going to pay close attention to that. All right, plenty more still ahead. This is Bloomberg. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. The yen slumps to its lowest level against the dollar since 1990, raising the prospect of intervention. Japanese stocks also rally, while the rest of Asia struggles after a late sell-off on Wall Street.
After the 1.5-mile-long Baltimore bridge collapses in a matter of seconds, we'll look at the impact on commerce and global trade.
Plus, as South Africa gears up for its election, the ruling party's chairperson tells us the ANC is campaigning to win.
We don't plan for a coalition. A coalition is a consequence. Okay?
Yeah.
We campaign to win the election outright.
It is just past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasaja.
And I'm Vonnie Quinn in Dubai. And Jen, as we know, there was a late sell-off in the U.S. session yesterday, which saw the S&P 500 down about 1/3%, the Nasdaq 100 also down about 1/3%. 2 days of declines now for those indices, but that might not stay the case because at least futures-wise, we are pointed higher for today's session. We'll have to see if that continues. And there were a few stocks to really watch as well. Reddit being one of them. It had a huge gain yesterday. UPS had a huge decline, even though it gave really rosy forecasts for the next 3 years for profit and growth. But obviously, investors just didn't buy it. What they were buying, though, was Donald Trump's publicly traded SPAC product, his digital media company, which went public and traded for the first day on the open market yesterday. That stock was up 16% and put his paper worth at $7.2 billion. For now, he isn't able to sell any shares in that particular company for another 6 months. Ahead of the PCE data, we have the 2-year yield hanging out at 4.59%. And then Brent crude showing some weight. It looks like stockpiles were pretty heavy, Jen. We also want to have a quick look at this chart because it shows us how much investors are depending on so few stocks for the S&P gain this year. We're talking about 60% of the S&P gain coming from about 6 stocks, including Meta and Amazon. What they're not counting on, though, is Apple and Tesla anymore because, as you can see, the white and yellow lines have completely gone in the other direction, and you can't count on them at the moment for those gains, Jen.
Right, but still massive contributors to the markets. Look, Vonnie, you mentioned that futures are pointing higher today, but we talked about that sell-off that we saw on Tuesday, late Tuesday on Wall Street. What we saw from developing nation stocks, so they actually rose. Right now, they're marginally down. But this chart is really interesting, especially as we approach the end of the first quarter. EM markets are still lagging despite what we've seen, the euphoria from developed markets, largely driven by AI enthusiasm. It's not necessarily trickling to other EM markets. If we take a look at the MSCI EM index, it's up just over 1% in the past 3 months. And that basket of equities is really contending with a number of risks, including potentially the U.S. election. There's also the higher for longer narrative from the Fed. And that rally or lack thereof that we've seen from Chinese equities, which still is seeing the country stocks lower than at the end of last year. What we're hearing from Barclays analysts, though, is that a shallower U.S. easing cycle may continue to weigh on EM assets over the long term. But that is just a look at what we've seen with both DM and EM markets. Let's, though, pivot to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen, yeah, Chinese stocks are down today as well, and that's despite data earlier today showing us how industrial profits rose in the first 2 months of the year, pointing to a stabilizing Chinese economy. But as our Bloomberg intelligence colleagues have been flagging, those weak sales for Chinese property developers, they're likely to have extended in this month, and we're seeing the builders among the big decliners in Chinese stocks today. So that's why you're seeing that that bleed in equities, but we're also seeing the drag coming from Chinese tech. Let's flip the board and take you to the stock performance of Alibaba. This is a company that was once the biggest Chinese e-commerce firm, and today we're hearing about how it's scrapping its listing of its logistics arm. It is facing these souring market conditions. It is facing intense competition, and a couple of years ago, that regulatory crackdown, these strategic missteps by the company, certainly not boosting investor confidence, turning from the biggest Chinese e-commerce firm to the biggest drag on the Hang Seng today. That's what we're seeing in the Asia Pacific, guys.
Thanks so much, Avril Hong in Singapore for us. Let's pivot, though, to the African region. The Central Bank of Nigeria has raised interest rates for the second time in a matter of weeks. The bank is stepping up its battle to curb inflation and sustain a recovery in the nation's battered currency, the Naira. For more on this, we are joined by Bloomberg's Ndira Oganga, who's joining me here in studio. So, Ndira, we've seen 2 hikes in a span of weeks. I mean, is the central bank really confident that inflation is taken care of?
They are not quite sure that they've managed inflation. What they're saying is they're looking at global conditions and monitoring them. And judging from other central banks in developed countries, they're likely to keep their interest rates higher before it begins coming down. So this means that global monetary conditions are going to remain tight. If we also look at Nigeria, the central bank governor says inflation is on the rise, 31.7% in February, up from 29%. Food inflation is also on the rise, 37%. And it's the same issues that are driving inflation: high cost of energy, high cost of transport, insecurity in food-producing regions, but also a weak Naira. And the Naira has had a really tough time since Tinubu came into office. Despite all the reforms that they've introduced, it's still weaker than it was 12 months ago.
Why is South Africa, by the way, Ndiro, expected to hold? Because there are expectations that there will be a decline in inflation in the next 2 years. So why is it necessary?
Because the central bank has made it very clear, Vonnie, that they intend to anchor inflation at the midpoint of 4.5%. Now, according to the Bureau of Economic Research, they think that inflation will begin declining, but that is in 2025 at 5.3% and in 2026 at 5.2%. However, the current data is not as encouraging. Inflation in the month of February was at a high of 5.6%, up from 5.3% in January. So the central bank governor, Leseja Hanyago, says until inflation is on a downward descent towards their midpoint, monetary policy is going to remain tight.
Bloomberg's Ndira Oganga. Thanks so much, Ndira, as always, for your reporting. Let's just stick, though, with South Africa. The chair of the ANC has told us his party needs to consolidate its support as it heads into a crucial election in May. In an exclusive interview, he discussed the main issues facing voters. Take a listen.
Is electricity the number one issue that you're hearing complaints from voters?
There are quite a number of things that...
What would you say is the number one complaint that you're hearing from voters?
Energy is one of them.
Energy.
Unemployment is one of them.
Okay.
For example...
Unemployment is north of 30%.
It's very important.
Yeah. So, and again, I'm just curious what the ANC's defense is of people who are saying it has been years... And this is the state of the economy.
No,
why would we re-vote
We're not defensive. But we explain to people that, you see, if you say there is an army of unemployed graduates, you're starting at the wrong point. The first starting point is that the ANC has opened up education facilities to everybody. A white university that used to only accept white students, vets, UJ, Pretoria, UCT. All of a sudden, there's a majority of students who are black and who are actually generating a big number of young graduates. And to me, once you flood society with educated young people, the structure of that society has changed even before you do anything. And the majority of people with those degrees do get jobs. There are few who do not. And what we should be focusing on is what is called career guidance, so that people must not focus on administration and social sciences when the demand is on hard technologies. We are aware of that. Yes.
If the ANC were to be voted in again as the majority, are there changes, though, to the current policies that the party is considering?
The policies are correct.
Will there be continuity, or do you plan to make changes based on where...
There will be continued, there will be adjustments with their need.
Where? Can you tell us where?
No rush. Relax. No rush. Let's give you an example. I talked to you about career guidance. That if you go to rural provinces, many of them will go and study public administration, municipal management, human resources, all social sciences. We have a responsibility to set up structures to give them career guidance that, listen, today you can do a quantity survey. It has more opportunities. You develop it into property management and development. You get opportunities. You even work for yourself in that space. Or you can do agricultural sciences or agricultural economics and all those things. You can produce for yourself in those issues. Once people begin to catch that up, you will see the change in the behavior of society. And that's what the ANC will do.
And that was the ANC chairperson speaking to my co-anchor, Jennifer Zapasaja. And Jen, a fantastic and really interesting interview. It seems that Mantashe thinks that the public doesn't want a coalition, but it's also not clear that the public wants the ANC back either.
Yeah, exactly. And Vani, this is really the first time, as we've talked about a lot, that the ANC could potentially lose that key majority. And what we heard from Gwede Mantashe is that he's not concerned about that necessarily. And that's even coming despite a lot of the challenges, one of which that he noted that he's hearing from voters, which is energy security. And it's not just a concern for voters. It's also a concern for investors and for the economy. We saw South Africa narrowly avoid a technical recession, but Bloomberg Economics is still suggesting that infrastructure delays, also energy load shedding, as we call it here, power outages, are still going to be a deterrence and really a hinder for this economy to really grow in the way that it could. And so that's why we really wanted to press him and ask him, what is it that the ANC is planning to do if they are voted back in to make some of these changes that investors, that voters, that South Africans have been waiting to see for a number of years.
And you mentioned unemployment above 30%. An economy can't really function securely and, stably with that kind of unemployment. He didn't particularly have great answers for what they will do differently if they're voted back in, did he?
Right. And the key thing here, too, with unemployment is it's a number of young people, right? And so what we're seeing, there's a number of parties that are actually running in this election, and a lot of them are trying to appeal to this younger voter base. But these are the young people who don't necessarily have jobs to go to in this economy. And so what Gwede Mantashe was telling us, that they are trying to canvass and go out and speak to younger voters, because that may make all the difference when it comes to this election if they actually do decide to turn out, which, we've been following this very closely in our newsroom. We're not quite sure what the turnout is going to look like because a lot of people feel like they've heard the same promises for years but haven't seen a lot of changes. So we're going to be paying very close attention to this, of course, over the next few weeks and months as we head to May 29th, Vani.
Yeah, it's fascinating, Jen. I know you're interviewing all the candidates and everyone that is involved, basically, with the elections. So we will be looking forward to seeing some of those interviews on this show and some more on Africa Amplified, which, by the way, comes up again next Friday, April 5th at 9:30 Dubai time, 7:30 Johannesburg time. Plenty more still ahead. Stay with us on Daybreak Middle East and Africa. This is Bloomberg.
I don't see China as a threat, and I advise everyone to not see China as a threat, and I certainly say to everyone in China, don't ever be a threat.
In the last number of years, we have brought our medicines to China to help patients. In the last 4 or 5 years, innovation has boomed in China, and it has given many opportunities for us, but also other global pharma companies to partner with Chinese biotech companies.
Some of our guests there at the Boao Forum, now underway in China. It's billed as the Asian version of the WEF in Davos. And today's hot topics include AI, obviously, geopolitics and financial cooperation. Our chief North Asia correspondent, Stephen Engel, is covering the forum for us. We've had 2 days now, Stephen, of panels and discussions and meetings and lectures, basically. What were your takeaways from day 2 of Boao?
Well, obviously, after basically 5 years of not coming back here because of 3 years of COVID-0, and then also last year was more of a soft opening up of China. We haven't been back since 2019, and a lot of the executives, some of whom you just heard there, whether it was AstraZeneca or Fortescue, they had not necessarily been back to Boao for similar years. AstraZeneca actually is doing many deals here over the last 12 months, spending some $6 billion. Obviously, Fortescue, the iron ore exporter, is doing a lot of business, even though the Chinese economy is slowing. And that's what this meeting here at Boao on the shores of the South China Sea are here for, to get clarity on policy in a slowing economy, to get clarity on some of the more tricky issues in geopolitical struggle between the West and East, the bifurcation of global supply chains and the like. And on the flip side of that as well, it's for Chinese to kind of turn on the charm offensive and say, look, we are open for business. Don't necessarily listen to all the noise. We're open. We welcome you. We want to get commercial ties back on track.
And Stephen, Bloomberg's also reporting that a number of U.S. executives are actually planning to stay back and actually meet with President Xi Jinping. What more can you tell us about that?
Yeah, Xi Jinping is not here at Boao. They sort of alternate it. He comes one year, then the premier comes. This time, actually, it's the number 3 man, Zhang Lizhi. He is going to be here giving a keynote tomorrow. There's 7-man standing committee. He's number 3. Xi Jinping is in Beijing, and you're absolutely right. It was kind of a last-second meeting called. We got word late yesterday that a meeting would happen today. It did happen. Xi Jinping met with U.S. business leaders as well as those from the academia. The only name that I've been able to confirm so far is Blackstone's Steven Schwartzman, the founder of that PE company. Obviously, he has been very active in the China market. He met with Xi Jinping. We do know that Tim Cook of Apple was at the China Development Forum over the weekend, as well as Pfizer's Albert Bourla, Chubb CEO Evan Greenberg, FedEx's Raj Subramanian, among others. We just haven't confirmed if they met. But if they did stay on after the China Development Forum, most likely they did meet with Xi. And it probably was simply an audience with the emperor. What did Xi Jinping have to say about courting U.S. businesses 4 months after that high-profile meeting he had with Joe Biden in San Francisco on the sidelines of APEC, as well as having a dinner with U.S. executives on the sidelines of APEC with U.S. business leaders? Clearly, he wants to have a charm offensive to get U.S. businesses, global businesses, back into China at a time when foreign direct investment into China last year grew at the slowest pace in 30 years. There is a hesitation right now because of policy opacity, some laws on counter-espionage here in China, and just the whole trade war on high-tech exports from the U.S. to China, the blocking of that, the export curbs. There's a lot of uncertainty.
And I presume some of the executives will be saying those very words and have been saying those very words to Xi, assuming that they have met. Stephen, what does it look like? Are relations warming or are they getting a little colder? We are seeing consistent moves on the part of the US and China on trade, for example, that don't appear to bode well for relations.
Look, I've been covering China for nearly 34 years, 21 of which at Bloomberg, and there are always geopolitical trapdoors that come up. It's a matter of navigating those trapdoors and making sure that commercial ties can survive. There's been obviously tremendous headwinds in this relationship, in particular the U.S. and China, that are likely to get amplified by the upcoming election in November. There's going to be a lot of rhetoric, and the rhetoric perhaps will rise above the reality. The reality is China wants U.S. businesses to come here, but they too, China I'm speaking of, also has its national security issues, just as as the United States is seeing legislation go through Congress, including in biopharmaceuticals. As I mentioned, I talked with Pascal Soriot of AstraZeneca. He has to navigate that Biosecurity Act that's going through U.S. Congress. So there's national security concerns on both sides, in the United States, in China, and the peripheral countries. No disrespect to all the other nations, but you know, this is a China-U.S. trade war that's not going to get better unless the sides are talking and there is clarity after the election in November.
Really grateful to get your expertise there. Bloomberg's Stephen Engel joining us this morning from the Boao Forum. Stephen, thanks so much for joining us. All right, plenty more still ahead. Stick with us. This is Bloomberg.
Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. A little bit of breaking news now on Apollo. UBS and Apollo agreeing to conclude the investment management and transition services agreements that will have Apollo buy $8 billion worth of senior secured financing facilities from UBS. Now, this is all part of the carve-out of the former Credit Suisse securitized products business. It's according to a statement. And once again, Apollo to buy $8 billion of senior secured financing facilities from UBS. Now let's get back into Middle East markets. Dubai considering an IPO of construction firm Alec. This amid a property boom that's pushing real estate prices close to record levels. Joining us now is our equities reporter Farah El-Bahrawi. So Alec is another listing on the horizon. Farah, tell us more.
Absolutely. Bloomberg yesterday reported that Investment Corp of Dubai, also known as ICD, is looking to list this company, Alec. Details of the size and timing are not yet clear, and ICD could potentially decide not to go ahead with the listing of Alec. But it is just, and if it does go ahead, it will be one of the many IPOs that Dubai has been pushing forward onto the table with the idea of trying to build their capital markets, trying to grow their market placement globally. And also, these listings have seen massive demand from local and international investors. Alex specifically has worked in leisure, airport, residential and commercial projects. And if you live in Dubai, you know that rent prices are through the roof, occupancy levels are at record highs. So Alec would be coming at a prime time for the real estate market.
And Farah, we also had a listing from Algeria yesterday. We don't always hear that. I mean, what are the details that you've learned about that one?
Absolutely, because this company was actually the fifth to list on the Algerian Stock Exchange overall, Jen, and it was the biggest one on record for the country. That was Crédit Populaire. That's a bank, a state-controlled bank, coming to the market yesterday, which made it grow sevenfold. So in sizing, they raised $833 million, the biggest in Algeria, but they actually had weaker demand than expected. They sold 81% of the IPO.
Wow. All right, Bloomberg's Farah El-Bahrawi. Farah, thank you so much for joining us. Always great to get you on. All right, stick with us. There's plenty more still ahead. This is Bloomberg Middle East and Africa. Next up is Bloomberg Daybreak Europe. This is Bloomberg.